lifting for us here. Let's trade ahead of that report. Scott Bauer, CEO of Prosper Trading Academy, joining us with the block on the mind. Scott, good morning, sir. What do you think?
Good morning. Well, first of all, I've got to send out a lot of kudos to Mr. Hinks here. I've known him for a long time, traded with him, and, people just have to listen to him. This guy knows what he is talking about. He cuts through all of the mishmash out there. So, Kevin, great job analyzing not just Square, but just your take on the overall market here. And talking about oil with the shortfall, I'm sure when oil went negative, Kevin bought as much as he could. So he's got it. Now, that being said.
Yeah, he was owning the barrels. He had barrels parked outside his home.
Exactly. That being said, Kevin was talking about where the VIX is, 28 right now, which seems to be kind of a midpoint of where this has traded over the last couple months. Just so people know, a VIX of 28 is representative of the S&P's moving in about a 1.5% range every single day. 1.5% every single day. So pretty lofty levels there, but that's what it represents. Talking about Square now, Oliver, I love this company long term. I'm going to own this thing for 10 years. I really want to own this. However, this market right now is a very difficult market for pretty much any company across the board when it comes to earnings here. There's going to be a shortfall. How is the market going to react to that? So when I look at this from a technical standpoint and I say, you know what, this is a stock I want to be long, what's that price point that I am willing to literally just go out there and buy stock and just hold it? And to me, that price point is about $85. That's where the next level below where we are right now. So, we're trading 97, 98 right now. That's the level that if someone said, Scott, you buy 1,000 shares, 100 shares, whatever it is, that's where I want to buy it. So I'm going to trade based off of that. So what I'm doing, and I rarely ever just sell put, but I'm doing it because if I get assigned and the stock goes down, I'm willing to buy that stock. So I'm selling the May 20th expiration 87.5 strike put. When I sent this to you just literally a few minutes ago, those puts were trading about $3.50. They're up to about $4.50 right now. Great. I want to collect that premium. If the stock goes down, if the stock gets hit, if I get assigned on those puts, I now have my stock, my long stock, at somewhere between $83 and $84. That's fine with me.
Okay.
That's where I want to own the stock. If I don't get assigned on those puts, great. Then I keep all of this credit. I keep the premium. So again, I know what my max loss is, and it's a lot, but it's the same as if I owned stock, which is what I want to do. So I am taking advantage of massive amounts of premium because of the volatility here. I'm drawing a line in the sand saying that 85 level or so, which is the next area of support, I'd go out and buy the stock anyway.
Okay, so you've got cash ready to work. There's a part of this trade that's unseen, basically, which is that you're ready to own it and hold it. But you'd also be fine just collecting some premium if it doesn't get down there so fast.
Right. So I'm actually looking at this both ways, as a trade and as an investment.
Okay.
Typically, you don't see that. If I get hit on my put, fine. I've got my investment that I want to have. If I don't, I keep the premium and I go on to the next trade.
All right. Message received. Scott Bauer with the hopeful look here at the long-term picture for block and selling some downside. And I shout out to Mr. Hinks for the crude analysis. Thank you, Scott, CEO of Prosper Trading Academy.